Yo, real talk for a second. 95% of companies dumping billions into AI right now are getting literally zero return. I'm not talking about, disappointing returns. I'm talking straight up goose eggs. Nada. Zilch. And here's the absolutely bonkers part. They're doubling down anyway. Right now, there's over $1 trillion, with a T, being thrown at AI like it's the second coming. Your job, your 401k, your entire financial future is tied to this bet, whether you know it or not.
But the smartest money in America, the guys who've actually been through this rodeo before, they're quietly backing away, and some are straight up running for the exits. By the end of this video, you're going to understand exactly why, and more importantly, what you need to do right now to protect yourself before this whole thing comes crashing down. Buckle up. This is going to get wild.
The AI bubble. Now, I know what you're thinking. Oh, great, another YouTuber telling me AI is going to take my job. Nah, man, this is way bigger than that. See, everyone from your boy's cousin who just got into crypto to your financial advisor who's supposed to know better is probably telling you the same thing. AI is the future, bro. Get in now or you'll miss out forever. This is like getting into Amazon in 1999. You're going to regret not buying these stocks. But here's the thing nobody's telling you. This exact situation went down 25 years ago. Same hype, same promises, same get rich or get left behind energy. It was called the dot-com bubble, and it absolutely wrecked millions of Americans. People lost their life savings. Retirement accounts got nuked. Regular folks who thought they were being smart investors got absolutely destroyed. And right now, we're watching the exact same movie play out again, just with a different soundtrack. By the end of this video, you're going to know why AI company valuations are straight up delusional, the warning signs that Wall Street is pretending don't exist, what happened to people who ignored these red flags back in 2000, where the actually smart money is going. Spoiler, it ain't AI startups. And most importantly, how to protect yourself and actually build wealth while everyone else loses theirs. This isn't me hating on AI. AI is legit, it's real technology. But that doesn't mean you should be YOLOing your savings into it at the top of the hype cycle. Let's get into it. The dot-com disaster, when America learned the hard way. All right, before we talk about what's happening right now, we gotta rewind the clock about 25 years. Because if you don't learn from history, you're basically volunteering to get wrecked. Picture this. It's the late 90s. Silicon Valley is absolutely popping off. The internet is brand new. Everyone and their mama is saying it's going to change everything forever. And you know what? They were right. The internet did change everything. But here's the plot twist that nobody talks about. Being right about the technology and actually making money from it? Two completely different things, homie. Between 1995 and 2000, the NASDAQ, that's where all the tech stocks live, went from about 1,000 to over 5,000. It literally quintupled in 5 years. Any company that slapped .com at the end of their name could go public, and the stock would double on day one. Not because they were making money, not because they had customers, literally just because they were internet companies. Let me hit you with some real examples of how insane this got. Pets.com. These guys spent $300 million on marketing. They had that goofy sock puppet mascot on Super Bowl commercials. Their whole business model? Delivering pet food at a loss on every single order. How'd that work out? Company went bankrupt in less than 2 years. Stock went to basically zero. Investors lost everything. Webvan, online grocery delivery before anyone knew what that was, raised $800 million, built these massive high-tech warehouses all over the country. The problem? Nobody wanted to order groceries online in 2000. Company completely collapsed. Almost all investor money? Gone. Cosmo.com, free 1-hour delivery of literally anything, no minimum order. You could order a single Snickers bar and they'd bring it to you for free. Obviously, that's not sustainable, right? Burned through $280 million. total collapse. And these weren't some random startups in somebody's garage. These were billion-dollar companies that regular Americans poured their retirement savings into. Then March 2000 hit, and the music stopped. The NASDAQ crashed from 5,000 down to 1,100 over the next 2 years. That's a 78% loss, y'all. $5 trillion in wealth just evaporated. Poof, gone. Retirement accounts destroyed. Middle-class families who thought they were being smart by investing in the future lost almost everything. Now here's the really messed up part. The internet was revolutionary. Amazon survived and became a trillion-dollar company. Google emerged. Facebook came later. eBay, PayPal, Netflix, all of them are massive now. The technology absolutely changed the world. But most investors still lost everything because they bought overpriced garbage at the peak of the hype. Does this pattern sound familiar? Because it should. It keeps happening over and over. This isn't even the first time. It's like Americans have the memory of a goldfish when it comes to this stuff. 1920 stock bubble. Stock prices have reached a permanently high plateau. That's what they said right before the 1929 crash. Then, Great Depression. 2008 housing bubble. Housing prices only go up, bro. Until they didn't. Millions of Americans lost their homes. Financial crisis, Great Recession. People are still recovering from that. 2021 crypto bubble. Bitcoin hit $69,000. People were buying NFTs of literal JPEGs for millions of dollars. Then it all crashed. Bitcoin dropped 77%, trillions wiped out. Regular people got absolutely smoked. Every single time. The pattern is identical. New shiny thing emerges, internet, housing, crypto, now AI. Early success creates massive hype. Money floods in from people who don't understand what they're buying. Prices disconnect completely from reality. Warning signs get ignored. This time is different. Bubble pops. Regular people lose everything. Only the early folks who sold near the top actually win. And guess what's happening right now with AI? The exact same playbook. Step by step. Let's break down why. All right, let's talk actual numbers, real money, because this is where it gets absolutely wild. OpenAI, the company that made ChatGPT, is currently valued at somewhere around $500 billion as of late 2025. For context, that's more than Costco, more than Netflix, more than McDonald's, almost as much as Visa. All right, let's talk actual numbers, real money, because this is where it gets absolutely wild. OpenAI, the company that made ChatGPT, is currently valued at somewhere around $500 billion as of late 2025. For context, that's more than Costco, more than Netflix, more than McDonald's, almost as much as Visa. Now, here's the million-dollar question. Or I guess the $500 billion question. What revenue is OpenAI actually making? According to the latest reports, OpenAI is on track for about $13 billion in annual revenue. Okay, cool. Now let me blow your mind with some simple math. That's a valuation of roughly 38 times revenue. Let me give you some perspective on how absolutely insane that is. Apple, one of the most profitable companies in history, trades at about 8x revenue. Microsoft, printing money hand over fist, about 13x revenue. Even Amazon, at its most hyped growth phase, was around 15x revenue. OpenAI is valued at 2 to 5 times what the most successful tech giants in human history are valued at relative to their revenue. Oh, but wait, it gets worse. Way worse. OpenAI isn't even profitable. They're losing billions of dollars every year. But bro, they're investing in growth. Yeah, okay. Let me tell you what they're actually investing in. The costs that nobody wants to talk about. Most Americans have zero clue how expensive AI actually is to run. Training these AI models costs hundreds of millions of dollars. We're talking massive data centers that cost $10 to $20 billion each to build, thousands of specialized AI chips that cost $10,000 to $40,000 each, electricity bills that would make your eyes water, Training GPT-4 cost an estimated $100 million in compute alone. Cooling systems, because these things generate insane amounts of heat. Constant updates and retraining. But here's the really wild part. Running AI costs a fortune too. Sam Altman, the CEO of OpenAI, admitted it costs them probably single-digit cents every time someone uses ChatGPT. Okay, that's not so bad, right? Wrong. They're handling hundreds of millions of queries per day. Do the math. Even at just 1 cent per query, that's millions of dollars per day just to keep the lights on.
And most users don't even pay. ChatGPT has a free tier. So OpenAI is literally paying for you to use their product while they try to figure out how to make it profitable. Does that sound like a $500 billion company to you? The comparison that should terrify you. Let me connect the dots for you. Pets.com back in 1999. Revolutionary idea. Buy pet stuff online. Great marketing. That sock puppet was everywhere. Massive hype. Stock went through the roof. Reality check? Lost money on every sale. No path to profitability. Ending? Bankrupt. Investors wiped out. Most AI companies in 2025. Revolutionary idea. AI will change everything. Great demos. ChatGPT is legitimately impressive. Massive hype. Valuations going parabolic. Reality check? Burning cash like crazy. No clear path to profitability at current scale. Ending? To be determined. Listen, I'm not saying AI is fake or useless. AI is real. The technology works. It's going to change a lot of things. But that doesn't mean these companies are worth what people are paying right now. You can be 100% right about the technology and still lose every penny you invest. That's the lesson from the dot-com bubble that everyone seems to have forgotten.
Here's where the whole AI story really starts falling apart. The entire pitch for AI, the whole reason these companies are valued so high, is that AI is supposedly going to massively boost productivity, right? AI will make workers 10 times more efficient. Companies will produce way more with way less. Profits are going to explode. The economy will boom. That's the story Wall Street is selling you. But here's the uncomfortable truth that nobody wants to talk about. It's not happening. Like, at all.
The data is crystal clear. According to recent research from MIT and analysis from Goldman Sachs, 95% of companies that are investing heavily in AI are seeing zero measurable productivity gains. Let me say that again for the people in the back. Zero. Not slower than expected, not a little bit here and there, no improvement whatsoever. Despite spending hundreds of billions of dollars, hiring entire AI teams, implementing AI tools across every department, training employees on AI systems, executives promising shareholders that AI will transform everything.
The productivity needle hasn't budged. Why isn't AI delivering? Here's what's actually happening in real American companies right now. 1. Implementation is way harder than the demos. AI demos are fire. You watch ChatGPT write a whole essay in 10 seconds and you're like, holy crap, this is the future. But actually implementing AI in a real business, that's a whole different ballgame. Your company's data is probably a complete mess. Most companies' data is. You got to integrate it with all your old legacy software. Your employees either don't trust it or don't know how to use it. Legal and compliance teams freak out about liability. Security concerns are through the roof.
AI makes mistakes, expensive ones. AI hallucinates. It literally makes stuff up. It'll give you a super confident answer that's completely wrong. In a demo, that's kind of funny. In a real business with real customers and real money on the line, that's a lawsuit waiting to happen.
3. The productivity gains are massively overhyped. Yeah, AI can help you write an email 2 minutes faster. Cool. But was writing emails actually your bottleneck? Does saving 2 minutes on emails actually move the needle for your company's bottom line? And what about all the time you spend fact-checking the AI's output to make sure it didn't just make something up? Real workers are seeing this. Talk to actual people using AI at their jobs. Here's what they're really saying. I spend more time editing and fixing AI output than if I just did it myself from scratch. My company bought these expensive AI tools. Nobody uses them because they don't actually solve our real problems. AI is cool for some simple stuff, but it can't replace actual human judgment. This is the productivity paradox. Companies are throwing billions at AI, but they're not getting billions back. That gap between spending and returns, that's the bubble, my friend.
Now this is the part that should really concern you. The people building AI are telling you it's a bubble. Not random haters, not skeptics with no skin in the game. The people at the very top of the AI industry. Let that sink in for a second. Sam Altman's warning. Sam Altman, CEO of OpenAI, the guy who literally has the most to gain from AI hype, said this in 2025. I believe an AI bubble is ongoing. Read that again. The leader of the most hyped AI company in the world is flat out telling you there's a bubble. When the person selling you something tells you it might be overpriced, you should probably listen.
Mark Zuckerberg's reality check, who's pumping billions into AI at Meta, said, "A lot of companies will collapse in AI because they're not actually building sustainable businesses." He's literally competing in the AI space, and he's telling you most companies won't survive. That's like a restaurant owner telling you most restaurants fail. Yeah, no kidding, but he's still opening one anyway.
Even the banks are nervous. Goldman Sachs, one of the biggest, smartest investment banks in America, published a whole report asking, Gen AI, too much spend, too little benefit? Key takeaways. Companies are on track to spend over $1 trillion on AI infrastructure. Most won't see returns that justify the investment. The technology is impressive, but the business case is shaky. Infrastructure costs are way higher than anyone anticipated. When Goldman freaking Sachs is questioning the returns, you should be paying attention.
Jamie Dimon drops truth bombs. Jamie Dimon, CEO of JP Morgan, literally the biggest bank in America, said in late 2025, AI is real, but I think some money being invested now will be wasted. There's a higher chance of a meaningful drop in stocks over the next 2 years than the market is reflecting. Translation: the crash is coming, and it's gonna hurt.
The circular money game. Here's something that should blow your mind. Nvidia, the company making AI chips, just invested $100 billion into OpenAI. Why? To help OpenAI build data centers. What will those data centers be filled with? Nvidia chips. So Nvidia is basically paying its customer to buy its products. You know when the last time we saw deals like this on a massive scale? The dot-com bubble. It's the financial equivalent of a snake eating its own tail, and it can't last forever.
All right, let's bring this home to what actually matters for regular Americans. Not Wall Street investors, not tech billionaires. Your job, your paycheck, your ability to pay rent next month. The job scare is overblown. Everyone's freaking out about AI taking jobs. AI is going to replace developers. AI is going to replace writers. AI is going to replace designers. We're all going to be out of work. Here's the reality, and I need you to really hear this. Yes, AI will change some jobs, but it's not replacing humans nearly as fast as the hype suggests. Why not? AI still needs constant babysitting. Someone has to check its work because it messes up constantly. AI can't handle complexity. Simple stuff, sure. Complex problem solving with nuance and context, not really.
Companies are risk-averse. No company is going to fire everyone and replace them with AI that might screw up and cost them millions in lawsuits. The jobs AI affects most were already getting outsourced anyway. Entry-level data entry, basic content, simple coding tasks. These were already on the chopping block.
What jobs are actually safe? Here's what smart Americans are focusing on right now. Skills AI literally cannot do. Trades, plumbers, electricians, HVAC techs. AI can't come fix your AC when it breaks at 2 a.m. in July. Healthcare, nurses, dental hygienists, physical therapists. AI can't give you an IV or help you recover from surgery. Complex expertise, senior engineers, project managers, strategists. AI can help, but it can't replace years of experience and judgment. Human connection, sales, therapy, teaching, customer service that needs real empathy. Physical work, construction, logistics, warehouse operations, delivery drivers. AI robots are still decades away from being cost-effective at scale.
The pattern is clear. High-skill trades and jobs that need physical presence or human judgment, you're good. Low-skill computer work that's repetitive, that was already at risk before AI. The real opportunity nobody's talking about. Here's the plot twist. The AI boom is actually creating more jobs than it's eliminating, just different kinds of jobs. Companies need people who can train AI. They need AI system integrators. They need data specialists who can clean and organize data. They need compliance people who understand AI regulations. They need workers who can use AI as a tool to be more productive.
The winners won't be people trying to compete against AI. The winners will be people who learn to use AI as a tool, like a power drill or a calculator. Calculators didn't eliminate accountants. They made accountants more efficient and created demand for more complex accounting work. Same thing's going to happen here. Have you seen this play out at your job yet? Let me know in the comments what you're actually experiencing.
If this video just changed how you're thinking about AI, your investments, or your career, smash that like button right now. It genuinely helps us reach more Americans who need this reality check. Subscribe to Capital and Power for more straight-shooting finance content that actually prepares you for real life, not just the fantasy land Wall Street wants you to believe in. Drop reality in the comments if this opened your eyes to what's really going down. And tell me, where are you watching from? What state? I love knowing where our community's at. Next week, I'm breaking down exactly where the smart money is moving right now, while everyone else is distracted by AI hype. You definitely don't want to miss that. Till then, stay sharp, stay skeptical, and don't believe the hype. This is Capital and Power, real finance for real Americans. Peace.